Hello everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 30th of January and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 400 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big industry stories for you to enjoy all in one place. And as I say, we finally hit episode.
We have got a lot to get through this week. So we've got quite a few stories, but we've got a busy show, haven't we?
We have indeed. So as well as the headlines, which we'll go through in the first half of the show, do stay tuned for our special interview with CAP HBI's Head of Valuations, Derren Martin. And Derren's going to be taking us through January's used car price trends. And that's on the back of the publication of the January editorial. So that really is hot off the press.
Yeah, and as you say, I mean, we've a busy week, but we're quickly giving a few shout-outs, and the first one is to Will Winter, who is the Santander sales development consultant there at Santander Consumer Finance in the UK, and he sent me a little note basically saying, hi Philip, just wanted to say a big fan of the podcast and has been a great for broadcasting his understanding and keeping him in the entertained whilst working from home. So not only are we delivering news, we're keeping people entertained as well.
Yeah, well, this is public service podcasting, isn't it?
That's the one. And we've got some likes and sort of comments as well, haven't we? We've had a busy week.
We have, yeah. So shout out to the guys at JL Autos who always like and retweet us. David Billsborough, of course, from Cheshire Cars, and Richard Alcock from Motoring Research. So thanks to all of you for liking and sharing. And
do you want to run through a couple of the sort of the headlines that we've got this week? Because we have had to sort of keep it fairly tight, haven't we? Because there is a lot of headlines again, but with the interview with Derren at the end, we're trying to keep it a little bit tighter this week.
We are indeed. So headlines this week are from the Financial Times, Fleet News, AM Online and Car Dealer. And we'll start with Lookers finally publishing its much delayed results for the first half of 2020. Cambria boss Mark Lavery says car makers need to give dealers an easier ride in lockdown by relaxing some of their rules. Look forward to that one. Lockdowns are prompting over 3/4 of buyers to visit multiple car search websites. Vehicles fail MOT in record numbers due to emissions. We also look at why MG is targeting further dealer network expansion in 2021. And finally this week, one dealer group's quick thinking solution to getting a fully loaded car transporter back on the road after the snow that fell earlier in the week.
So as you say there, the first story that we're going to is being picked up by a lot of the media, both the nationals and the trade media, but we're going to the Financial Times, and this is Lookers hit by 50 million first half loss after car showroom closures, and that's the looking at the UK car dealership. Lookers has booked a 50 million first half loss as the pandemic forced a widespread shutdown of its showrooms, and it also it's delayed its results as well, which they've just published their interim results, haven't they?
They have indeed. So this is Lookers, who are currently rated number 2 in the AM100. So they saw a 40% decline in revenues to £1.56 billion and a 355% decline in pre-tax profits to as you say, that was a £50 million loss, and that's during the 6-month period to 30th of June 2020. And the results, I mean, everyone will recall this, have been delayed a number of times as a result of the fraud probe that's been ongoing at Lookers.
Yeah, but I think, again, everyone's been waiting for the results to come out. The shares are now back on. So we know that the shares got suspended through the continuous delay of the results. There'll be some happy people out there possibly, depending when they bought their shares, and they've come back onto the market at double what they were suspended at. So it depends on how heavily you invested. But again, positively, it's great to see them active again. It's great to see the results finally out, and it'll be even better once we start to get through the pandemic and lookers get control of what they've been doing and what's been happening out there in the market. But they still remain reasonably positive, don't they? I think the outlook is that they talk about that the country's now in its third lockdown, and whilst the closure of the showrooms will impact their revenue, this is partially obviously mitigated by the continued progress of click and collect, or click and drive as they've described it to in the statement there. But they're going to continue their operation as the group's COVID compliance after sales division. So again, a lot of focus there with the group and continuing trying to obviously grow the business and continue activity. So as many others are doing the same.
Yeah, now the next story is from Car Dealer, and it's Cambria boss. Manufacturers need to give car dealers an easier ride in lockdown and relax their rules. So this is an interview that Mark Lavery gave to Car Dealer, and it's actually a video on the Car Dealer website. So I urge you to go and have a look at that. It's a good interview. And Mark, as we know, because we've had him on the show a few times, he doesn't pull his punches. And in the interview, he really makes a point about how empathetic some car brands are at the moment and how others just aren't. They just don't get it. He says the group is operating at something around 40 to 50% of normal levels, depending on which brand it was. And, he does say that some car brand partners have been empathetic and they haven't stuck rigidly to the rules, but he's now calling on more car makers to guarantee bonuses and relax standards and work together through the current lockdowns.
And it does call out, saying that one manufacturer called him in the week and demanded that he changed his entire demonstrator fleet, and he did swiftly point out at a time when dealers are not even allowed to give test drives. So again, sort of shouting out that there needs to be a bit of pragmatic approach from some of the manufacturers towards the current situation of the market. And
I should imagine that was a short phone call.
that might have been a polite way of describing it as well. We don't know with Mark. So I'm sure maybe we'll get Mark on at some point in the future again, and he can expand on some of these conversations that he may have had throughout this period. But moving on and talking about obviously car buyers, etc. Over to AM Online, and this is car buyers visiting more car search websites during COVID-19, and this is some research and by eBay Motors Group, which is obviously the sponsor of in association with the podcast there. But talking about what consumers are doing at the minute with searching for cars, isn't it? Which is good that they are searching. It's it's positive to the sector that they are searching, but they are doing a lot of searching, I think, from the research.
Yeah, and what is particularly interesting is that these buyers, they're not sticking to one car search platform. They're looking at multiple platforms. So the research which was carried out in December, and casting your mind back to December, and there were tiered restrictions, there were lockdowns. It was virtually impossible to go into a dealership. And they found that 76% of buyers said they were using more marketplace websites to search for their next car than they were before the pandemic, and 74% were saying they were spending more time visiting these websites than before. So that does sort of reconfirm what you were saying, Phil, that buyers are out there, they are searching, and they're spending more time doing so because they can't get onto forecourts, they can't get into showrooms, so they're doing that research online.
Yeah, there is a hope that when activity can get a little bit more where the dealers, if they can go down to the dealerships and do test drives and things like that, possibly, then the activity proves that potentially they are there in the market to buy once they've made those decisions from the research.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the big car retailing headlines, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, or wherever you find your favourite podcasts.
And going over to fleet news now, and interestingly, this is all about the MOTs, and we know MOTs been discussed a lot pre-lockdown about the deferment of the MOTs, and the people trying to extend the MOT period and things like that. But actually, this is about the emissions now, creating a record number of potential failures of MOTs due to the more stringent rules around emissions. So starting to see what these changes to the emission output is going to have on the market, and the increase in failures of MOTs.
Yeah, now this story is based on a Freedom of Information request to the DVSA that was made by Book My Garage, and it found that almost 1.3 million vehicles failed their MOT last year because of faults relating to exhaust emissions. Now, once you dig down into these stats, diesel vehicles saw the greatest surge in failures due to emissions, with a rise of 240% compared to just 37% for petrol vehicles. And this is a lot of this is down to the new rules and regs that were brought in, which saw the introduction of major and dangerous faults resulting in failed tests. So that does rather suggest that the new rules and regs are actually working.
Yeah, definitely, and hopefully, it's putting some potential revenue into the after-sales market for the dealers and the MOT testers as well. That's one way of looking at it. So, yeah, it's again proves that the new regs are working, as you say, Curtis, and starting to put these more stringent measures in place.
Yeah, they've got teeth.
They have. And moving swiftly on to the next story, and this has got a little bit of a sort of an angle with the EU exit on it as well. But the AM Online have picked up that MG Motor UK have targeted a further expansion to 130 additional dealerships in 2021. Now, that's a significant growth in percentage terms, isn't it, for the MG brand? But it also proves the intention of these Chinese brands in the UK market.
Yeah, so MG Motor have said they're targeting the appointment of 10 more franchise sites this year, and that's after it added 28 new dealerships last year. So that will bring its network up from 120 at the moment to 130 locations. Now, regular listeners will know that we do look at MG on a regular basis, because throughout last year, they were one of the few brands, well, in fact, pretty much the only brand that was seeing year-on-year improvements in registrations. So registrations for 2020 were up 41%, which gave the brand a 1% market share. And of course, that's pretty much on the back of, they've got a very strong electric proposition with vehicles like the ZS EV, the MG5 EV, and the HS plug-in hybrid. So they're kind of in the sweet spot at the moment with affordable new EVs. And recent weeks and months have seen them add some big dealer names to the network. We only last week, I think, we saw JCT 600 in Bradford. Over recent months, Glyn Hopkin in Milton Keynes, Perry's in Huddersfield, and Drive in Bristol. So they're doing something right.
No, you're right, and obviously, it's not necessarily wholly connected, but obviously with the exit of Mitsubishi from the UK and the European market, I think there's been a number of retailers that have replaced Mitsubishi with MG, or looking at MG as an opportunity as opposed to Mitsubishi as well. So again, a great opportunity for the retailers for doing that. So again, I think that growth will be achievable. I mean, say, Curtis, you said right at the start there that what they did throughout 2020 and what they've done in the last sort of 24 months as well, additional 10 should be relatively easy to achieve for them.
Yeah, and finally, so we head over to AM Online, and this is a video. And finally, so do head over to the AM website and have a look at the video after you hear us talk about it. But the headline is: New Land Rover Defender rescues car transporter from ice and snow. Now, this is probably the best bit of marketing that Land Rover are likely to get this year, because it's a video of a car transporter that was just stuck in the snow and ice outside of Stafford Land Rover, one of the Swansway sites, at the beginning of this week. So some quick thinking staff there thought, well, we've got some Defenders. Why don't we use one to try and tow the transporter out of the ice? So sales manager Matt Knowles, big shout out to Matt there, jumped behind the wheel of one of these Defenders and towed the transporter out of the snow and ice. And I must emphasize that it was fully loaded. It's got a load of Land Rovers and Jaguars on the back of it, so no mean feats. It took a little while, but he got him out of it.
He did, yeah. And I mean, John Smythe is a big supporter of the show, and I saw it on social media, and then he messaged me that as well with it. But like you say, I mean, you start to watch it and it doesn't look like it's going to achieve it, does it, initially? And then it just gets a grip. You've got the transporter wheels going, and the Defenders there just slipping a little bit there, but it does just get that grip and start to move it. And it's great to watch, and like you say, Curtis, a fantastic advertisement for what the Defender can do. What they were built to do in many ways. But I'm sure that in much of the JLR media, they never thought about pulling a fully loaded transporter through the ice and snow to prove what it's capable of. But
yes,
as you say, huge shout out for quick thinking staff there to record that, and it's done. It's gone viral, hasn't it, across social media?
It has, yeah, and the transporter has the Swansway logo on it, so it's good PR for the guys at Swansway as well. And as you say, John Smythe, he did post it, and it did go viral. He said on LinkedIn it had something like 52,000 views, and I actually came across it on the Daily Mail website, so I assume it's had even more views since then.
Yeah, definitely. Great, and finally there.
Yeah. Now, next up, we have a special Motor Trade Radio interview with CAP HPI's Head of Valuations, Derren Martin, who will take us through the used car trends he identified in January.
So, welcome back to the show, Derren, and good to have you back on, and thanks for joining us and to share some of your insight into the what drove the used car market in January.
Thanks for inviting me, Phil. It's good to be back on.
So, welcome back, Derren. Good to have you back on the show. Now, this week, CAP HPI published its eagerly anticipated overview of January, a market which has been in lockdown since the 4th of January. Can you just kick off by sharing some of your highlights for the month?
So I guess the main headline is that values have dropped in January, which is quite unusual for this time of year. Obviously, there are reasons for that this time around, but generally in January, you get a fairly stable month. Demand tends to be high in both January and February from consumers and the trade, and values usually hold up very well. They're probably the strongest 2 months of the year. And what's happened this time around, obviously, we've gone into lockdown. We're in a we were either going to be in a tiered situation or a lockdown situation, unfortunately. And when the lockdown has hit, it has affected the market, and we've seen values drop to 1.4%. is the highlight figure, the average at 3 years, and that is equivalent to about £150, which is not a huge drop, but we feel that without any lockdown or restrictions, that wouldn't have happened. The market was in the used car market's in fairly good health, so we have seen drops there. That I would say would be the main highlight. There's lots of detail within that. The way we look at and value vehicles, we don't just produce a broad brush movement, and there are differences by age, by different types of vehicle, and there's still some strength in the market. So it is very dependent on where you look. But that would be the highlight, that it's that there is a downward movement of trade values, whereas retail has probably held up better. Was definitely held up better, but there aren't so many people out there buying trade vehicles.
And in terms of that 1.4% drop, that follows drops in December and November as well, doesn't it?
Yeah, so I think it's the fourth month of declines, and that's off the back of a strong year last year. That dipped away in the final quarter, really. And over all of those months, the movement's been around 8%. But values did go up last year. They were up year on year by about 2% on average. So for them to be dropping down, some of that 2% includes the movements that were made last year. So down in the final quarter, I mean. So that 8% of drops doesn't feel huge, although it's quite a headline figure for values to drop that in that short space of time. But it's off the back of values going up prior to that. And overall, a really strong year last year for the used car market. And also, the market is still up and running this year. It's not as though we've dropped values because cars aren't selling. They are still selling. They're selling in lower volumes and at slightly lower prices to where they were.
And I think you're right. I think you look at last year, Derren, and what is it, I think the whole year, bearing in mind that obviously it sort of stopped for a couple of months there, which everybody agrees what you guys did in terms of that hold the market through the initial lockdown when there was no activity. I mean, the whole year was down 4.5% for the full year, compared to a 15.3% for 2019. So you've got to be careful, as you say there, that you can't just look at the 4 months in terms of November, December, January and February and go it's an 8% when the whole year last year was only a 4.5% compared to a 15.3% the year before, can you, in all intents and purposes?
No, when you track values in our current valuations, the old black book product, as we used to call it, that is really, when values go up, they tend to come down. And when that happens, it tends to be a realignment of the industry, really. So and that's what happened. It happened in 2018 and 2019. Values went up in 2018. They came down in 2019. What happened really last year was just over a shorter period of time, values increased and then decreased in the final quarter, but still ended the year up from where they were a year earlier, which is unusual. And what we're seeing so far in January is a continuation of that, whereas without a lockdown, we would have expected that values would have probably stayed more stable and more level. What we're seeing volume-wise is probably around 50% of normal with regards to volumes in the trade. So retailers going out and replenishing their stock is probably at about 50% of normal or of their 2020 levels for January. So it is vastly reduced, but there are obviously reasons around that. Many retailers have got people on furlough, especially buyers. They stocked up in December, ready for what they hoped would be a quite buoyant January. So they've already got stock. And the big thing as well is that we don't know when this lockdown is going to end. So if it ends, we don't know. It's the unknown of it being of that is that nobody is going to go out and speculatively buy cars for stock at the moment. You might go and buy the odd vehicle, the odd nice vehicle, maybe sold orders or something that you can comfortably sell. But without knowing when we come out of this lockdown, it would be a brave buyer to go out and completely stock up at the moment. So that's why the volumes have reduced, and off the back of supply and demand, there are more cars out there than the demand, so values have dropped.
Yeah, and I think I mean it's a question on the seasonality, and it's very difficult at the minute in terms of the whole pandemic period. So compare with normal seasonality, isn't it? That's we're not in a normal market, we're not in a normal seasonal market, are we? So we are, as you said there, you're reacting to the various different unknowns. There is activity which is different to the first lockdown, but it is on a smaller scale, as you've pointed out there, that volumes are 50%. There's some good performances against your values, there's some poor performances, there's some good conversions, there's some poor conversions, but very much sort of vehicle by vehicle specific these days at the minute, isn't it? As you say, they're looking for certain stock but not necessarily stocking up as you would
Yeah,
maybe see.
yeah, definitely. And one of the older vehicles have done well again. They've actually gone up in value. Anything sort of 10 years old, we've got some examples there of cars that have gone up. So that's kind of been an interesting dynamic, which is similar to what happened in June last year. I get one of the theories I might have on that is that if your car dies, you do need another one. If you just want to replace your car, maybe you're not going out at the moment. And obviously those older cars, that might be like an essential purchase really on replacing those. So we have seen some strength there in the older area of the market. Sports cars have actually done quite well. They've hardly changed in price at all during January. There's still, and certainly older ones of those as well. So there's still a feeling that people are going out and buying something that makes them happy, looks good on their driveway, a bit of a toy as we call it. Some models that have been sort of worse affected are in the MPV sector, which they've been heading down for quite a while now. Probably not quite as desirable as they once were. People choosing an SUV over an MPV, and maybe the car supermarkets that have got people on furlough and aren't as busy as maybe some of the franchise dealers. That's where you'd buy an MPV from, and they're not out there replenishing their stock. So we've seen values reduce on those. They've actually come down by over 2% versus that average of 1.4. And there's some models in there that I can pick out, like the Galaxy, the Alhambra, the Zafira. They've all reduced by in excess of £400, which for a Galaxy is around £600 in 1 month. So it's then some not insignificant drops on those MPVs, but they start to look good value then. And then you think, well, those drops won't continue. They will at some point. They will at some point slow down. But at the moment, those do tend to be under a bit more pressure, as are hybrids, either plug-ins or normal hybrids, because they are priced really in the market. They're priced above petrol and diesel equivalents. So there's been some heavier drops on those fuel types as well, and electric vehicles, which again still look quite expensive, and there's no incentives for the used buyer, whereas there is for the new buyer. And there was quite a lot of activity in December on electric vehicles, so it may have been better to buy a new one than a used one at that time as well.
And just on that point of electric vehicles, do you think that is you mentioned there, is it realignment? Is it trying to get those used vehicles to more, like you say, a more affordable or better proposition as a used vehicle? And as you say, I think I heard that there was some activity in tactical and product going into the market in the EVs as well in December. Do you think we're going to see a little bit more of that on the EVs as they become a more affordable used vehicle proposition against the new?
Yeah, I think there's more drops to come on electric vehicles. They still look expensive compared to petrol and diesel cars. There's supply levels are going up because obviously they've been in the market for longer now. Electric vehicles that used to be, there was just the Leaf out there. Now there's a lot more choice and a lot more volume coming through. I'll temper that and say that there is still demand, and demand is increasing, but probably not to the rate of supply. And those the premiums that those cars sort of hold at the moment are based off lower supply levels. So if supply increases and demand doesn't match it, then those values will be affected by more. It's not going to drop off a cliff, but we do think there's probably the drops on electric vehicles and hybrids as well will probably drop by slightly more than the petrol and diesel values will over the coming months.
Now, Derren, in your conversations that you've had over the past month with dealers and suppliers, how would you describe wholesale supply and consumer demand in January, and where do you think it's heading as we go into February? Because, okay, we're in middle of a lockdown. Well, we don't know if it's the middle yet because we don't know the end point, but we're in lockdown. Click and collect is operating across many franchise and independent dealers. So how is the supply and demand looking?
So if I start with demand, we speak to a lot of retailers and we can see what's sort of happening in the figures as well. But with the retailers, generally, demand levels have been, I would say, somewhere between 50 and 70% of normal, maybe up to 80% early on in January. It feels that the premium brands are doing probably better than more mainstream brands. Franchise dealers are doing better than car supermarkets, and I think there are reasons for that. If you're the business model of a car supermarket is that people want to go there, they don't quite know what they want to buy, so they're going to go and have a browse around, have a look at the vehicles, and then choose something, and that might be something they weren't even considering before, and that's obviously not happening at the moment, so that you can't go and browse, so their business levels are more slightly down. They're probably nearer the 50%, whereas some franchise dealers, and as I say, some premium brands that are in demand, they've been performing okay. So demand levels are around those areas. There are obviously some outlets that have decided to close completely for either because they're not set up to trade online, or they're being very safe, don't feel that it's an essential purchase for people, and they want to keep their doors shut at the moment and maybe take advantage of the furlough scheme. So there are some big differences out in the market. But generally, though, the business levels are worth the ones that have opened to stay open. Click and collect works quite well. I think it's quite interesting that it seems to be more popular for used than it does for new, which is interesting, bearing in mind a new car, you know what condition that's in, whereas a used you don't. But it is quite active in the used market, and everyone's getting far more used to it than they were in the first lockdown of last year, certainly. And so that's really where demand is. With regards to supply, there's certainly volume out there. The volumes are increasing in the trade arena, and buyers they're not out there buying. So those rates at about 50% of normal, those stock levels will continue to go up. Although there are probably some remarketers that are holding off to a certain extent from remarketing their vehicles at the moment, waiting for what they hope will be a bit of a boom that could come when pent-up demand is realised when we come out of this lockdown, depending on when that will be. So I think there will be some pent-up demand at that time as well, but there will also be more supply coming back into the market, which could temper some of the valuation movements.
That's interesting. So some fleets are holding back on defleeting at the moment because they just want to see what will happen once the lockdown restrictions are lifted.
Yeah, some are doing that, and some sort of held back in December as well, because prices. There were some vendors out there selling quite cheaply at various points in November and December. So there was a little bit of holding back at that point, and still a little bit of holding back now and waiting. Certainly, that's certainly not across the board, but there is a little bit of that going on. Which has tempered some of the volumes coming back, but the volumes are they're going to increase as we move forward, because there are still cars that are on leasing extensions and Motability cars that have been extended and those type of things, and repossessions. So they'll be coming back into the market over the next few months. So those volumes will be increasing.
Yeah, and I mean, it's kind of that conversation around the end of forbearance at the end of this month, this weekend, and that activity starts to take place, and potentially, like you say, it's that balance, isn't it, between that supply and the demand, at what rate they start to rise in alignment with each other. So therefore, you're not going to get this imbalance of supply and demand potentially if we start to see more product coming in at the same time as we start to see a little bit of pent-up demand into the sector.
Yeah, I think that's exactly what's going to happen. You're going to get more demand, but you're also going to get more supply. And that could that'll be an interesting dynamic, because I don't think we're going to get what happened in June of last year, when demand went through the roof and values went up, especially for older vehicles, went up by quite a few £100s. I don't think it will happen to that extent. I think there might be a bit of a lift straight away with that pent up demand. There might be a little bit of activity, and we'll be reflecting that in our live product as we go through a month. But I think there will be that will quite quickly dissipate, and there could be then could get back to a little bit more normality.
And you mentioned sort of that franchise dealer compared to independent dealers and car supermarkets, and you also, you mentioned earlier about obviously that premium sector seems to be still holding, and there's some sentiment in the market that seems to reflect that, to say that those buying Land Rover, BMW, Audi, they're quite happy buying those vehicles online, doing a click and deliver. But the lower end mainstream product not quite so comfortable, particularly as you say in that supermarket world. Do you think those dynamics between franchise and car supermarkets at the minute are playing out a bit more obvious these days in the current market than may have done previously, because of the buyer behaviour and how they operate in a click and collect environment?
Yeah, definitely, but that's definitely the case. But I would also say that the demand at the higher end is mainly that those consumers are not so financially affected by the pandemic as maybe people that are in lower paid professions that will buy those sort of cheaper cars. So they're buying the necessity purchases, but then maybe that mid-range vehicle, those mainstream cars, they're not doing quite so well. You've obviously got some people on furlough, they're not earning quite as much, although people have made savings. But at that top end, you've got people that are still earning money. They may have had bounce back loans, they may have had grants, and they've not necessarily been on furlough either. So they have more spare money in their pocket, and they are picking up those more premium vehicles. We've seen that across the board. As I mentioned, sports cars earlier, large SUVs have also performed quite well. They've been in demand, and when you look at SUV, it has been those larger SUVs that have done better with regards to values than the smaller ones that are more mainstream and more plentiful, I guess, in the market as well, because it's always down to supply and demand. Demand drops, but there's plenty of cars out there, then prices will drop.
And Derren, in your editorial, you highlight a drop in ex-daily rental cars coming into the market in December. You say that was down 45%, and over 2020 as a whole, down 50%. I was just wondering how much of an impact this lack of young used cars coming into the market will have over the course of Q1. What's your view on that?
Well, the figures that I put in the editorial were actually, so that was new car registrations on rental, so it wasn't used cars coming back into the market.
Ah, right, yeah, sorry.
Yeah, so it's 45% down in December and 50% for the year. But you're right to sort of question where that leads to, because obviously new cars lead to used cars and the rental market quite quickly. So we'll see. Obviously, you're going to get less young used cars. There seems to be a little bit less pre-registration activity out there. Last year, for obvious reasons, again, there weren't the supply levels out there from manufacturers. A lot of the rental companies last year did go back into and sell their used vehicles around from July time onwards, when it was a really buoyant market. And why wouldn't you, when the market was so strong? So there will be a shortage of later plate cars, but to sort of counter that, we always see elasticity from prices of, say, 3-year-old cars, 2-year-old cars. You can't have a 6-month-old car or a 1-year-old car that is worth so much more than a 2 or 3-year-old car. So we see volume coming back in that 3-year-old market from, as I mentioned before, the extensions that have happened from registrations of 3 or 4 years ago, and there will be elasticity down to those younger used cars. So there could be a potential shortage there, or less of those cars, but we do think the pricing elasticity will sort of have an effect there. Rental companies are defleeting to a certain extent if they can get new cars to replenish them, and if they need to. And there are a lot of rental companies with different business models there. You have some that are heavily into the airport business. Obviously, they will not be replenishing their stocks at the moment. Others that are more into the van rental side of it are doing quite well, and there's some defleeting at the moment of vans into the rental market, and they will be being replaced because that's a buoyant area of the market. Again, accident repair probably down to a certain extent because there aren't so many people driving, but at this time of year more people have accidents, so their business model won't be as affected as those that are reliant on the tourism trade. So lots of moving parts within that really, but overall, yeah, registration's down, and there will be less defleets this year because of that.
And just following on from that, Derren, I mean, you made the point about those tactical registrations from OEMs that we traditionally saw going into the daily rental sector. They didn't really happen in volume last year. How will that manifest itself this year? Because we're going to see fewer of those vehicles being registered for daily rental usage coming into the market. So, how will that impact dealers actually trying to source those types of cars, which they know are pretty much retail ready?
Well, there will be less of them, so they'll be sourcing them from the manufacturers, ex-demos, some rental cars, ex-company cars, those types of things. Maybe some early terminations from Motability and places like that. So, yeah, it will be harder to find those vehicles, though there won't be so many of them coming back from the rental industry. So, there could be some effect from that on their business models. I guess their bread and butter though is always the 3-year-old car. So there will be plenty of those cars around, and they'll still be able to buy those cars, make a reasonable margin, and sell those cars on. So it might be that there's a little bit more of a little bit going into more of the bread and butter and what they actually like selling as used cars, proper used cars, rather than some of those more late plate vehicles.
Yeah. And just, I mean, touching on the a good topic of mine and ours is the old pre-reg and tactical registrations, Derren. Do you think there'll be, from conversations I've had across the network, do you think there'll be a little bit of appetite potentially, both from the retail network and the OEMs as we move through the quarter, the longer the lockdown goes through Q1 and the pressure goes on to the March performance? And we know there's product on the ground in the UK because of the Brexit deadlines that we went through, and some of the manufacturers brought product into the market. Do you think we'll see a little bit of appetite potentially for some tactical registration deals being done? Because the feeling is that those vehicles will be welcomed to the network because of the constraints on the new and the pressure on that nearly new market that there isn't a great deal of product about. Do you think we'll start to see a little bit of that potentially as we get towards the end of the quarter, subject to when we can get back to some kind of normality?
I think it will be brand specific. I think some will partake in that, others won't. Of all of the manufacturers that we've spoken to, they're all cutting back on the rental side of it, and they're all saying they're cutting back on pre-registration activity as well, and focusing on profitability, because that's what they need to do, because that obviously everyone has been affected by this financially, and the OEMs have as well. So I think there will be some pre-registration activity. It will very much depend on when lockdown ends, but I think if they're reasonable as well, they won't be setting too many high targets for their dealer network as well, and they'll be trying to work in partnership, which is how it should always work. And certainly some of the dealers that we've spoken to over probably the course of the last 10 or 11 months have welcomed the less reliant that they are on manufacturer targets and that pre-registration, and they've been making their money in different areas. They've been making their money in used cars and in their after sales business, and I think they're quite happy to be doing that. So I think they welcome getting off we always call it getting off the drug of pre-registration activity. So there could be some tactical buying if they need to stop in March, but I think they would, in the longer term, they would welcome that doesn't become the norm, and that there's more of a natural market without that push.
yeah, I think that's been the feeling, hasn't it, for some time, that just that demand from both the manufacturers and the retailers away from that tactical registrations. Although one of our early stories was with our good old friend Matt Lavery from Cambria, who pointed out that one of his manufacturers asked him to replace his entire fleet of demonstrators, of which he said that no, because nobody's test driving cars at the minute, so why should I? So he's been in the news this week calling out for that the manufacturers need to be a little bit more pragmatic, or some of them need to be a little bit more pragmatic towards targets and demo replacements and things like that at the minute. But
I saw that story, and very much so. I mean, this really, the last few months have been a bit of a resetting of all of that, all of those bad habits that the manufacturers got into, I would say, and that definitely needs to be the case. Why are you churning vehicles for the sake of churning vehicles when you don't need to? Obviously, they've been trying to keep factories open in the past and getting that volume through, but maybe there'll be some resetting of that as well. So, yeah, it definitely needs to be a partnership between the manufacturer and their franchise dealers.
And finally, the big question, the crystal ball question is, we don't know when lockdown is going to end. We've had the extension of the schools, the children going back to school. That is all subject to the rates declining, so it's kind of a caveat that could still change. But what's your view, optimism towards the used market for the first quarter of this year, and where do you expect values to go as we move towards March, as far as you can tell in the current situation?
So I'm really optimistic about the year for people within used cars. It's going to be a good year again. People are going to be buying used cars. People are going to be buying them in volume. They might buy instead of buying new cars. You see new car lead times now are crazily long for some. They might not be able to get finance on new cars as well, so it might be easy to get finance on used vehicles. So I think the market's going to be strong. I think while we're in lockdown, we will continue to see values dropping. I would expect what happened in January to continue in February with regards to small value drops, but that 1.4% wouldn't have happened if we weren't in this lockdown period, where they would have been a lot stronger than that. So there will be movement down, I would expect, in February. To what degree that is very dependent on retailers holding their nerve on prices, almost ignoring days in stock and things like that, not chasing too much business from their competitors, because that will drive down prices. But I can understand why they do that. There's a smaller pot of customers out there now, so they're all fighting for a smaller piece of the pie. So there will be some dependency on what happens with those areas. Remarketers, if they start to accept lower bids on their vehicles, then obviously that will drive prices down as well. All we do is reflect what we're seeing in the market. So I'm expecting a similar drop during February to January, but there's lots of caveats around that, around what the trade does and what the retailers do. Longer term, I think March, I think we'll still be in lockdown throughout much of March. So you could see more of the same. When we come out of lockdown, I think, as I touched on earlier, I think there will be some pent-up demand. I think if you look at retailers, say their business levels are at 60% now, that means 40% of people haven't bought but will probably be looking to buy. So there'll be some pent-up demand, but there will be supply levels out there, and there will be plenty of supply to kind of temper that. So I think you might get a bit of an uplift when we come out of lockdown, depending on when that is. Depends also if it's around that Easter period, whether people are around or taking advantage of a couple of short weeks and taking time off. That tends to be a watershed for valuations, but we're in an unprecedented situation now, so I think you can almost throw seasonality out of the window. So I think prices will continue to drop. There'll be some pent-up demand that might give a little bit of an uptick, and then the increased supply will sort of temper some of that. So I guess in summary, I think it's going to be a good year for used cars. Values will drop in that during the next few weeks, probably. Then there'll be a little bit of positivity. Then, I mean, looking longer term, I think there will be some pressure on values as the economic impact of all of this hits. And you look at the fact that values have been fairly high for a period. They've been coming down now, so there might be less drops than we were previously predicting. But I think the second half of the year, there will still be demand out there, but supply may lead to further drops in values during that period.
Well, Derren, many thanks for joining us today, and thanks for sharing a bit of optimism as well. In terms of what could be in store for the used car market. Anyone wanting more details on the January editorials can head over to the CAP HBI website, because you've now got the editorials posted for cars, LCVs, and bikes. So do go over there to find those. But Derren, do come back next month and tell us how February performed.
Yeah, will do. Be interesting to see if my prediction comes true. But thanks for inviting me on.
Yeah, that's it. It's very difficult at the minute, isn't it? I mean, as you said there, we're in unprecedented times. But I think for me, great insight and a great view from yourself, because I think it's as you always say, Derren, the devil's in the detail, isn't it? There's the headline figure, but actually it's what's happening behind that, and it needs the context, it needs the explanation, because a 1.4 movement doesn't tell the full story as what's going on in the market. So thanks again for joining us. It's been a fascinating chat for me, definitely, and those are listening, I'm sure they'll enjoy every minute of it.
Pleasure.
Well, that's all for this week. Thanks for joining us. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Stay safe and well, and join Philip and I again next weekend for all the chatter that matters. Until then, it's goodbye from me.
And it's goodbye from him.